Welcome all the viewers. Dr. Vijay's lectures on accounting, lecture number 9. From this lecture onwards, we are proceeding to finalization of accounts. At Sabu's firm, his consultant has advised him to find the profit or loss for the month of January 2020 and to assess the financial position on 31st January. So he has to prepare final account and balance sheet. A lot of preparations are needed for the purpose. Let us move to slide 2 for studying about the preparations needed. The most requirement is having a trial balance which does tally. At Sabu's firm, there is a trial balance which is tallying as on 31st January. The second thing is preparing a bank reconciliation statement if the bank balance as per cash book and that as per passbook do not match. Number 3 is locating errors which do not affect the tallying of trial balance, not disclosed by trial balance. Number 4 is conducting stock taking to ascertain the values closing stock on 31st January. Number 5, locating prepaid and outstanding expenditures and incomes accrued and incomes received in advance. Next is deciding the rates at which to provide depreciation for fixed assets and provisions to be made for doubtful debts and discounts, etc. This list is not final. This lecture deals in detail with bank reconciliation statement, PRS. At Sabu's firm, the bank balance as per cash book is overdraft $9,700, whereas the passbook shows a balance of $1,000 favorable balance as on 31st January. Therefore, it is necessary to prepare a bank reconciliation statement. The statement explains the cause of difference between the bank balance as per cash book and that as per passbook at any moment. Such differences, if any, the cashier or accountant is answerable. Such differences occur mostly due to unavoidable reasons, but should however be explained. The statement is done whenever mismatch is located, but it is a must at the time of finalizing. Causes of difference between the two balances should be identified and listed before starting to prepare the statement. The statement starts with either balance and arrives at the other balance. If the statement starts with bank balance or overdraft as per cash book, it will end with bank balance or overdraft as per passbook. Where the balance of both the books are known, better start the statement with balance as per cash book. Arriving at the other balance or overdraft is possible only if all the costs of difference are added in the statement. Some of it added to the starting balance and the others subtracted. So the statement becomes self-explanatory. So many terms are repeated again and again while explaining about bank reconciliation statement and while preparing it. So we are using some abbreviations and symbols. BRS, Bank Reconciliation Statement. CB, Cash Book. PB, Passbook. Bank Balance, that is balance in bank account favorable to the account holder as Sabu's firm. It will be debit balance in cash book, credit balance in passbook. Bank overdraft, balance in the bank account where the account is overdrawn. It will be credit balance in cash book and debit balance in passbook. COD, O small letter, cost of difference. Cost of difference between the balance as per cash book and that as per passbook. So many costs will be there. GB, given balance or starting balance. The balance with which we start the statement. We may start with the cash book balance, then we will arrive at passbook balance. We may start with passbook balance, then we will arrive at cash book balance. AB, arrived balance. balance arrived through preparing the statement. Firm, the account holder who prepares the statement. From the bank's point of view, it is customer. OD, overdraft. Slide 5 deals with differences between entries in cash book and that in passbook. Transactions in favor of the account holder, the firm like Sabus. It is debited in the cash book, and those whereby money goes out of bank account are credited. In cash book, debit balance means in favor, balance in favor, and credit balance means overdraft. On the other hand, in passbook, transactions in favor of the customer, whereby money comes to the bank account, are credited by the bank in passbook. And those not favoring, that is whereby money goes out of the bank account, are debited. In the passbook, credit balance means balance in favor, and debit balance means overdraft. We are using the terms bank balance to mean favorable balance and bank overdraft to mean unfavorable balance. The position of Sabu's bank account as on 31st January is shown in slide 6. The cash book of Sabu shows a bank overdraft of $9,700, whereas the passbook shows a balance in favor of Sabu of $1,000. The causes of difference between the two balances are identified and listed. Number 1 is charges levied by the bank for services rendered $3,200 is not recorded in cash book. Bank levies charges for services rendered. For the month it is $3,200. It is recorded in the passbook, but it is not in cash book so far. Second cost of difference is out of checks issued for salary of salesman $8,000, the one issued to sales manager of $5,000 is not presented at the bank for payment until 31st January. Checks issued for salary of sales team $8,000, the entry for that is shown in cash book credit side bank column. But the corresponding entry in the passbook is only for $3,000 because the check of $5,000 issued to sales manager, he has not presented it at the bank so far, and it is not paid by the bank. So entry in cash book regarding salaries of sales team is $8,000. In passbook, the entry is only $3,000. There is a difference of $5,000. The third cost of difference, check issued to Mada Interiors $14,500 is not presented for payment at the bank so far. The check issued to Mada Interiors is recorded in cash book bank column on credit side. But in passbook, there is no entry for that because so far it is not present at the bank for payment and bank has not paid it. Now, fourth cost of difference. Of the collection for sale of goods through account transfer, $78,000, only a credit of $72,000 is found in passbook. In cash book, there is in debit side bank column a collection for sale $78,000. But so far in passbook, there is only credit for $72,000. The rest of the amount is not collected so far by the bank. There is a difference of $6,000 between the two books. Now the fifth difference, interest credited in the passbook $400 but not recorded in cash book. Bank has allowed interest in favor of Sabu $400. Entry for that is there in the passbook, but there is no corresponding entry in cash book. These are the costs of difference. We have to consider each cost of difference, find out which ones are to be added in the statement and which ones to be subtracted. That we are studying now. We are studying each cost of difference separately, one by one. Slide 7 is explaining a model which we use for deciding whether each COD is to be added or subtracted in the reconciliation statement. The model given makes the decision making very easy, however complicated the problem is. So be very careful. If the given balance in the recurrence statement is cash book balance, then the arrived balance will be passbook balance, and we know it. If we start with, that is, if given balance is passbook balance, the AB, the arrived balance, will be cash book balance, that we know. Before considering each COD, assume that both the books carry the same balance and show that balance in the model, not in the statement, in the model. Okay, this assumed balance can be any convenient amount. It is not going to affect our answer in the statement. So you can show any convenient amount. Look at the model shown here. Second column is given balance, cash book balance. Third column is arrived balance, passbook balance. So assumed balance 5,000 is shown in both the books. Then we are showing the cost of difference. What is the cost of difference? Read the last sentence in the paragraph, first paragraph. Work out a model as shown below. Say the COD is a check of $8,000 sent to bank for collection, not collected till the time of doing BRS. We know when the check is sent to bank for collection, the account holder will record it in the cash book. But the bank will record it in passbook only when the check is actually collected from the party who has issued it and money comes to bank account. That has not happened. So far the money has not come to bank account, and so no entry in passbook. Now look at the model. The COD, it is recorded, 8,000 is recorded in cash book, that is GB, given balance. And the balance to be arrived, that is passbook balance, it is not recorded. As a result, what new values come? In cash book balance it is 13,000. Passbook balance it is 5,000. Because this 8,000 entry has not come in passbook. New values is in given balance 13,000, in arrived balance 5,000. Now look at the rule. If the rule is, if the arrived balance is greater than given balance, new arrived balance is greater than new given balance, that cost of difference is an item to be added in the BRS. If the arrived balance is a lower value, new arrived balance is a lower value than new given balance, then that item is to be subtracted. And in the present case, look, new arrived balance is a lower value. Therefore, the checks sent for collection, not collected and credited in the passbook, is an item to be subtracted in the reconciliation statement. Read the last sentence. The AB arrived balance after COD is recorded is lower than GB. So the COD is an item to be subtracted in the statement. See the rule given in red color. The rule to be applied is, if new AB is greater than new GB, the COD is an item to be added in BRS. If new AB is lower than new GB, the COD is an item to be subtracted. So it is very simple. The model is very simple. You have to show the assumed balance first. The given balance should be shown first, and the arrived balance should be shown in next column. Assumed balance, you have to show the same amount in both the columns. Then the cost of difference should be recorded. In wherever it is recorded, actually in that book you record it. Okay, then find new values. The new value in AB is higher value. If it is greater, then this cost of difference should be added. If the arrived value, new value, is lower, the cost of difference is to be subtracted. You should keep in mind 2 points at this stage. One is, we are using the model independently for each COD. The second is, in the model we are using an assumed balance for each COD, but it has nothing to do with the statement. We are using the model for finding out whether the cost of difference is to be added in the statement or not. Okay, let us go to COD number 1. Please read. On recording the charges in the passbook, the AB arrived balance, that is ODS per passbook, goes up and becomes 8,200, while the GB, that is OD as per cash book, is same as $5,000 as OD is not recorded in it. Now look at the model. First column is GB, cash book overdrafts, and next column is arrived balance, AB, passbook overdrafts. Assumed balance is shown first, the same amount in both the books. Below that, the bank charges is shown. No entry for bank charges in cash book so far, so that column is blank. It is shown in passbook overdrafts, AB column, 3,200. What is the result? Where there is overdraft, if bank charges are also recorded, what will happen? Overdraft will go up. As a result, in arrived balance, that is passbook, overdraft becomes 8,200. In cash book, it is 5,000 itself. Now simple. See, arrived balance is greater. So this cost of difference is to be added. Added where? Added in the bank reconciliation statement. Nothing more. Simple. Read this sentence given in red color. New arrived balance is greater than new given balance to the extent of $3,200. So the CODE, that is $3,200 bank charges, is to be added in the statement. It is very simple. 9 explains whether cost of difference number 2 is to be added or subtracted. Read the statement. The second COD is out of checks issued during January 2020 for salary dues $8,000, therefore $5,000 is not present at the bank for payment. Only $3,000 is paid by the bank and recorded in the passbook. But $8,000 is recorded in the cash book. Now look at the model. GB is OD as per cash book and AB is OD as per passbook. Assumed balance, same amount is shown in both the columns. Now check issued for salary. 8,000 is recorded in the cash book. Only 3,000 is recorded in the passbook because the remaining 5,000 is not so far presented at the bank and is not paid by the bank. As a result, what happens? The new GB is $13,000, whereas the new AB arrived balance only $8,000. New GB $13,000, 5,000 plus 8,000, and new AB arrived balance is only $8,000, 5,000 plus 3,000. Now look at the results. The arrived balance is a lower value. So this cost of difference is to be subtracted. Finish. That's a decision. Now read the statement given in red color. The COD causes AB to be lower to the extent of $5,000. So $5,000 is to be subtracted in the statement in respect of cost of difference number 2. Slide 10 explains whether cost of difference number 3 is to be added or subtracted. The check issued to Mada Interiors of $14,500 is recorded in the cash book, but it is not presented at the bank for payment until 31st January. As a result, there is no entry for that in passbook. The given balance has become 19,500, but arrived balance continues to be 5,000 itself. Look at the model. The GB, that is cash book overdrafts, is in second column and AB, passbook overdrafts, is third column. Assumed balance 5,000 is shown in both the books. Then the check issued to Mada Interiors is shown in cash book column, GB column, 14,500. It is not shown in passbook column because that check is not presented at the bank for payment so far and no payment made by the bank and no entry made in passbook. The new values in cash book column, that is given balance column, it is 19,500. In arrived balance column, passbook column, it is 5,000. Simple. Decision making is very simple now. The arrived balance is lower, so this is an item to be subtracted in the PRS. Read the last sentence. Resulting AB is lower by 14,500. So the COD 14,500 is to be subtracted in the statement. Slide 11 explains whether COD number 4 is to be added or subtracted. Please read. The 4 COD is out of the collection for sale $78,000, only $72,000 is recorded in passbook. $78,000 is debited in cash book. In passbook only $72,000 is credited so far. In both the books, collection recorded reduces the overdraft. Now look at the model. Assumed balance in both the books is 100,000. Now collection from sales. 78,000 is recorded in GB, cash book overdraft. And 72,000 recorded in AB, that is passbook. As a result, the OD goes down because collection money comes to the account. New value in GB, cash book, is $22,000. And in AB, passbook, it is $28,000. Simple. The decision making is very simple now. Arrived balance shows a greater value, so the item is to be added. Read the second paragraph. As a result, GB has become 22,000, whereas AB has become 28,000. The new AB is greater than new GB for $6,000. So $6,000 is to be added in the statement in respect of COD 4. Now, imaginary balance, assumed balance. Here we have shown 100,000. In earlier cases, we have shown only 5,000 each. Why this big sum? See, the imaginary balance 100,000 shown. Any amount which helps addition or subtraction of COD, avoiding minus sign in new values, can be imagined. Here, the amount to be deducted is huge sum. In GB it is 78,000 and AB it is 72,000. After subtracting that sum, a minus new value should not come. That is why such a huge sum, 100,000, is assumed in both the books. Okay. Type 12 shows whether the cost of difference is to be added or subtracted. Interest credited in the passbook. Interest is credited in passbook only where there is balance in favor of customer at the bank. So the COD gives an indication that the passbook does not show overdraft. It shows balance in favor. Now look at the model. GB, that is cash book, assumed balance is 5,000. In AB, passbook, also assumed balance 5,000. Now the interest. Interest is recorded only in passbook, 400. See, interest credited in passbook means overdraft will come down. In the passbook, overdraft has come down to 4,600. Whereas in cash book, the 5,000 continues. Now simple, decision making is easy. AB is lower value. So the item is to be subtracted. Read the second paragraph. Where the GB is OD, working should be proceeded till the end under the assumption that AB is also OD. Look here in the problem, so far we have been assuming that passbook also has OD. As cash book has OD, we are assuming that passbook is also OD. We are proceeding with that assumption till the end. Whether passbook shows favorable balance, we can come to know only when we prepare reconciliation statement. Okay. We have applied the model for all the CODs and decided which ones are to be added and which ones to be subtracted in the bank reconciliation statement. Now we are preparing the bank reconciliation statement of Sabu's firm as on 31st January 2020. The statement has 3 columns, particulars column, inner amount column and outer amount column. The statement starts with bank overdraft as per cash book, $9,700, so that is the GB given balance. Now we are adding the items to be added, cost of difference to be added. Number 1, bank charges, $3,200, and the COD number 4, collection from sales, Entry for which is shown now, entry not shown in passbook due to technical issues, that is $6,000. When you are adding these two items to the bank overdraft as per cash book, we get $18,900. Now, the items to be subtracted we are showing in the inner column. Second one, salary dues not present for payment at $5,000. The third cost of difference, check issued to Mother Interiors not present for payment $14,500. And keyword number 5, interest credited in the passbook $400. The total of the three items is $19,900. Now, 18,900 minus 19,900 equals minus 1,000. We are starting with a positive value, 9,700. Okay, we are ending with a negative value, 1,000. Therefore, we have to understand what we are getting is bank balance as per passbook, not overdraft as per passbook. We started with bank overdraft as per cash book. We are getting a negative values answer. So we come to understand that what the passbook shows is not overdraft, it is a positive balance, $1,000. This is the format of bank reconciliation statement. Hope that how to prepare the model and decide which cost of difference to be added and which to be subtracted in each case. Now, slide 14 gives a problem to be tried by self. Please try it. The given balance is as per cash book on that December $10,000. 4 CODs are given. Prepare model for each and find out which ones to be added and which ones to be subtracted and prepare the statement. 15 again gives a problem to be tried by self. It shows debit balance in passbook $18,000. That is passbook overdraft as given balance. 5 cost of difference are given. You have to prepare model for each cost of difference and decide which ones to be added and which ones to be subtracted. Okay, your answer for both these problems we will check in our next lecture. Thank you for your participation till then. Please subscribe if you're not done and share maximum to all your friends and relatives who will be benefited. Your comments are welcome. Thank you.